What I wish I had known before I started dividend investing, which really is just a focus on passive income, right? Is that it's all about the underlying company that's paying the dividend, and that it's never a good idea to chase dividend yield when you should be chasing profits, especially when one has many years ahead of them, because dividend growth and total return will be incredibly more important than a chronically high dividend yield that grows really slowly. Also, the safest dividend is the one that was just paid to you. And if you don't believe me, ask anyone who bought Intel stock just for the dividend how they're feeling right now. By the way, I have a free weekly newsletter sharing a few thoughts and portfolio activities over at DapperDividends.com where you can sign up. So while this video is going to provide you with 35 companies that have a very safe dividend as rated by SimplySafeDividends.com, it's crucial to remember that it is just a third party's opinion, and it really should just be a starting point for your own research and not the final word. However, while companies that pay a consistently growing dividend are usually a good indicator of a healthy business, it's not always true, and the one thing to remember that will never change is that things are always changing. And if you don't want to deal with the time that it takes to research individual stocks, in my opinion, I'd say just buy the entire investable US market with something like VTI. Take the 10% average annual return and watch your money double every 7.2 years. It really is the no-brainer easy button to investing. But for those of you that do want to venture into the land of individual stocks, I ran a screen here on SimplySafeDividends.com and we found 35 very interesting companies, one of which we will also take a deeper look at. But what I screened for was a very safe dividend, a dividend growth streak of 5+ years. Because remember, a lot of times it's not from buying the dividends that pay the highest yield, but it's from holding those companies that have a really, really high dividend growth and growth streak. So 5+ years, timeliness is right here in this column, undervalued. What we're looking for there is something called dividend yield theory. And the idea goes is that when a stock's dividend yield is above its 5-year average, it looks to be undervalued, and the stock should come back down to that 5-year average, which means the price is going up. And conversely, if the dividend yield is below the 5-year average, it means it could be overvalued. Again, just one simple metric. And thinking about Intel, hey, they were way over the 5-year average, and now that dividend is poof, gone. And then we want moderate to low payout ratios to make sure that the company is able to pay that dividend. I put in a 5-year dividend growth rate of over 8%, which is fast and very fast dividend growth. And now of these 35 matches, because you're not going to be able to get onto Simply Safe Dividends, I created this handy dandy spreadsheet just for you, you dear dividend investing viewer, which is linked in the description below. So we have some information on the business, and I did link this to Seeking Alpha, so if you hover and click on that, as we did with Nike, it will whisk you away to the land of Seeking Alpha. But I want to show you something. Let me show you. If we open up an incognito window and go to Seeking Alpha, you'll still be able to look at a lot of information without having to log in, create an account, do anything like that. Now, you're going to be limited by a lot of the stuff, but there's still a good amount of information for free, like the last 5 years of financial statement information and valuation metrics. And if you want to save a bunch of money on an annual Seeking Alpha subscription, I do have my affiliate link below. So where we see analysis, you're not going to be able to read a lot of this because they want you to sign up. So now we're back to my logged in account, and you can see there's a lot of buy ratings and different things like that. A lot of great analysis and community on Seeking Alpha really can help you to be a better investor. So at the very least, you might want to at least just give yourself a 14-day free trial and check it out, snoop around. Back to our spreadsheet, and the B column is the dividend yield. How far above, as of this recording, it is above the 5-year average. And again, that's dividend yield theory. So if you click on this, Simply Safe Dividends has a really nice explanation, dividend yield theory, and it is actually quite a lengthy article that you can read for yourself. The C column, current dividend yield, what it is right now. Again, don't be scared off if you're a younger investor, buy a lower yield. As you see in the E column here, if it's growing at 11%, this is the 5-year CAGR, the 5-year dividend growth. Some of these are very fast, like Sony, 19%. That is huge. Visa, love Visa, been buying more of it, 16%. You get their dividend growth streak in the F column. And then in the G column, we have the earnings payout ratio. Remember, earnings per share can be financially manipulated by share buybacks, things like that. A much more solid number is the free cash flow payout ratio because, remember, the dividend is paid out of the free cash flow, and in the H column is the last 12 months payout ratio. So Visa, 22%. And some of these, it's very interesting, where you'll see Humana has an earnings payout ratio of 16%, but when you look at the free cash flow payout ratio, it's negative 9%. So that is a little bit of a red flag. Some of these are not meaningful, like the banks and utilities, because you want to use earnings per share payout ratio because the free cash can be highly volatile and it goes into a lot of capital intensive projects that don't have immediate returns. So you look at earnings per share on that. And then for REITs, very similar to free cash flow, is the adjusted funds from operations is what we use for REITs. But it is interesting because a company like Cognex, they have an earnings per share payout ratio of 48%, which they say is low, but you look at the free cash, 67, not too bad. It's getting a little high, but something to be aware of. And then in the I column is the net debt to capital, which shows how much a company owns compared to what it owes, and it kind of helps us investors understand a little bit better if a company might have trouble paying its debts in the future. So you like to see a low net debt to capital, so I included that in the last column to kind of help you get started on some of this research and putting ideas on your plate. So we have 35 of them, and the one that I wanted to highlight is right here, Old Dominion Freight Line, ticker ODFL. So the analysts have a buy rating on Old Dominion Freight Line, which is pretty much a big trucking company that moves goods for businesses across the United States, and they make money by charging companies to transport their products from one place to another using their fleet of trucks. And they could be a good dividend growth investment because they've been growing steadily for years. They're known for being well run and efficient, and as long as businesses need to move goods around, ODFL's services are going to be in demand. I want to show you a little bit of a trick Seeking Alpha might not be happy with. We're back in the incognito window, and if you click on some of the articles, they're going to block you from reading it, right? Well, what you can do is highlight and copy the article title. We're in incognito on Google. Search for it. Not the first one, but look down the line, see if you can find it, click on it, and look at that. You get to read it. So this is the article for Old Dominion, the last one. This doesn't work for everything, and if you're a cheapskate, you might have to pop around and see what you can find. But some of these articles you can read for free by doing it the sneaky cheap way. They do have a very safe dividend safety score of 81, very safe dividend yield of 0.54%. Don't be scared off by that. Because they have a 36% last 5-year CAGR, they've been growing the dividend for 6 years, currently paying $1.04 every year. Their dividend yield is 36% above the 5-year average. The PE still a little bit above the 5-year average. I can already hear some of you like, $193 a share. It's all about the shares outstanding. Remember, the fewer shares outstanding, the more earnings there are to spread over fewer shares, so stock price naturally goes up. But there's that free cash flow payout ratio really low, earnings payout ratio really low, very healthy. You love to see this trend up and to the right for earnings per share, free cash flow per share, doing very well. Sales growth from year to year sometimes can be spotty, but they've been consistently reducing their share count, which is why the price keeps going up, because sales keep going up, their profitability metrics and margins keep going up, like return on equity, stupidly high return on invested capital. These margins, this is just basically margin porn is what it is. This is hot. This is just damn sexy on the margins for ODFL. And to top it all off, you get the money shot here with the net debt to capital. They have no net debt. You've gotta love that. Here on finchat.io, I'd love to look at some of these, and the number I want to point out here is the return on capital employed. Anything at 20% or over is just outstanding. They're at 33% of a 5-year average. Just a very healthy business. FinChat gives them a price target of $196.80. AlphaSpread.com gives ODFL an intrinsic value, though, of $114.92. So put it on your watch list if you agree with them. They think it's about 41% overvalued, so maybe wait for it to come down a little bit. I started this in May. This is a performance tracker. We don't recommend too many stocks on the channel, but when I do pick one, I kind of want to track it and see what happens. So we got ODFL in here, and this will update automatically. Again, this will also be linked in the description below. I want to keep the chit chat to a minimum on these videos, so we do a lot of editing to make them go quicker, but almost every Sunday night we hang out for an hour looking up stocks, talking market, shooting the breeze, having some fun. So if you'd like to be part of that, look out for the live streams on Sunday nights. Hey, if you got value from this video, remember to tap the thumbs up button and hit the subscribe bell notification thing. And speaking of individual stock picks, in this floating little box next to my head, there was a stock that we recommended with 38% upside. Check out which one it is. Click that video, check it out, and I will talk to you and tell you all about it there.